Assalamualaikum warahmatullahi wabarakatuh. My name is FIN562 bin Abdul Halim and we are from BA2724E. So today we will be presenting about stock indicators. In this video presentation, we will learn how to use stock indicators, what kind of indicators are there, and how to perform stock analysis by using stock indicators. First and foremost, let me explain what is stock trading. Stock trading involves buying and selling shares in the financial market. The price of the financial market will always be moving either uptrend or downtrend, depends on the supply and demand of the stock market. And it is up to the investors or stock traders to determine whether to buy the stocks in the low price or the higher price, and in hopes of gaining profits by the movement of the stock marketplace. Now, the question is, how does traders know when to purchase the stock when the price is at its lowest? And when is the perfect time to sell the stock when the price is at its highest? Usually, traders will determine when is the perfect time by using the technical indicators, technical analysis. This is where our presentation will be presenting on each indicators available to use and how do we use it. In this presentation, we will be explaining all the indicators available and how to use those indicators to determine the perfect time to purchase or sell stocks. So, there are main 5 indicators that we will be learning in this presentation. The first indicator is stochastic, the second indicator is MACD, the third indicator is RSI, the fourth indicator is support and resistance, and the fifth indicator is rate of change. While using these 5 indicators, traders could benefit from risk management and could improve the timing of execution to reach their objectives.
Today, I will present my technical analysis using the Relative Strength Index, also known as RSI. RSI is a momentum indicator that helps traders identify whether a stock is overbought, oversold, or moving in a neutral condition. The RSI value moves between 0 and 100. Usually, when RSI is above 70, it means the stock may be overbought and the price could fall soon. When RSI is below 30, it means the stock may be oversold and the price could rebound. In this chart, I am analyzing the stock movement of Richtag in Digital Berhad or RTAG using the daily chart. The RSI helps us identify possible buy and sell zones based on the strength or weakness of price momentum. For the buy zone, we can see that it appears around early March to early April. During this period, the RSI was at a lower level and moved sideways for some time. This shows that the stock had already gone through selling pressure, but the selling momentum started to slow down. Even though the RSI was not extremely oversold below 30, it was still near the lower range, which means traders should start paying attention to a possible price recovery. The buy zone became more meaningful because the RSI later started to move upward. This suggests that buying momentum was slowly coming back into the market. After this buy zone, the stock price gradually recovered, which shows that the signal was useful. So, based on this area, traders may consider buying when the RSI starts to rise from a low level, especially if the price also shows signs of recovery or breaks above short-term resistance. Next is the sell zone, which appears around mid-April to mid-May. During this period, the RSI moved higher and stayed near the upper range. This shows that the stock had strong buying momentum and the price had already increased. However, when RSI becomes too high or starts to weaken after reaching a higher level, it can be an early sign that the upward momentum is slowing down. In this chart, the sell zone is important because the price spiked sharply in May, but it could not maintain that high level. After that, the price started to fall. This indicates that the stock may have reached a short-term peak. Therefore, traders may consider selling or taking profit in this zone to avoid losses from a possible price decline. The sell signal became stronger when the RSI started to move downward after the high momentum period. Based on the latest part of the chart, the current RSI is around 46.17, which is below the neutral level of 50. This means the stock is currently showing weak buying momentum, but it is not yet oversold. Because of this, my decision would be to hold for now. It is not for a strong buy because the RSI has not moved above 50 yet. At the same time, it is also not a clear sell unless the price breaks below its support level. A new buy may be considered if RSI moves above 50 and the price shows a stronger recovery. However, if the price falls below around 0.175 or RSI continues to drop below 40, then selling or cutting loose may be safer.
So let's continue. In technical analysis, one of the most important concepts is support and resistance. Support is price level where buyers are strong enough to stop the price from falling, while resistance is where seller becomes stronger and prevent the price from moving higher. Let's start with the buy zone. The main support zone is around RM0.160 to RM0.165 with another support near RM0.175. If you look at the chart, you can see several green buy arrows. This arrow shows that whenever the price drops into this area, buyer will step in and push the price back up. This tells us that demand was strong, making it good area to consider buying. Now, let's look at sell zone. The main resistance is around RM0.205 to RM0.210. We can see several red sales arrows around this level. This means that the stock tried to move higher multiple times but was rejected because seller was stronger. In May, the price briefly broke above this resistance and reached around RM0.220 to RM0.230. However, the breakout could not be maintained and the price quickly fell back below the resistance, showing that selling pressure was still strong. So, what should investors do? First, buy when the price reaches a strong support level and start to bounce upward. This gives a better chance of buying at lower price. Second, sell or take profit when the price reaches a strong resistance level and begin to show signs of rejection. This helps investors to lock their profit before the price starts falling. Finally, hold when the price is trading between support and resistance. At the moment, RTEC is trading around RM0.185, which is between the two key levels. Since the stock has not reached support or broken above resistance, there is no clear buy or sell signal. In this situation, the best decision is to wait for a clearer price movement before taking an action. To conclude, the trading strategy for RTEC is simple. Buy near support, sell near resistance, and hold while waiting for a clear breakout or rebound. By understanding this support and resistance level, investors can make better and more informed trading decisions.
Assalamualaikum. My name is Nur Ain Kamilia binti Hisamuddin, and now I am going to guide you through one of the most reliable and popular tools that traders use to read stock charts, which is called the MACD, or Moving Average Convergence Divergence. Now, please don't let that long technical name intimidate you, because at its core, the MACD is simply a momentum compass. Just like a weather forecast tells you if rain is coming, the MACD tells us which direction a stock's price is moving, how much strength or energy is behind that move, and most importantly, it gives us clear answers to the two biggest questions in trading. When is the right time to buy? And when is the right time to sell? To see this in action, let's look at this daily chart of Richtech Digital Berhad. If you direct your attention to the bottom section of the screen, you will see two colored lines flowing up and down together. The fast moving, the blue line, is our actual MACD line, which tracks recent price changes very quickly, while the slower yellow line is our signal line, acting as a smooth, steady guide. Think of them like two runners on a track. As they run, they constantly cross over one another. And every single time they cross, they are telling us a crucial story about who is currently winning the tug of war in the market, the buyers or the sellers. Let's look at our first major clue on the chart, which happens in late March. If you look at the gold circle labeled buy, you will notice a very clear event. The first blue line crosses directly above the steady yellow line. In plain English, this means the stock had finally stopped its painful downward drop. Selling pressure was running out and buyers were suddenly rushing back in with fresh energy. This crossover is a green light that tells us positive upward momentum is building up, making it the perfect strategic moment to enter the market and buy the stock just as the price begins to climb. However, as a smart investor, we also know that what goes up must eventually come down, and our main goal is to protect our money. This brings us to the early May section of the chart, where you can see two gold circles labeled sell. Here, the exact opposite happens. The first blue line loses its strength and crosses below the yellow line. This crossover is a massive red flag. It acts just like a car tapping its brakes before a complete stop, warning us that the buyers are getting exhausted. The upward trend is dying out and the sellers are starting to take full control of the stock. By paying attention to these two crossing points in May, a trader received a clear, timely warning to sell their shares and lock in their hard-earned profits safely before the price takes a sudden dive. To wrap everything up, reading the MACD doesn't have to be stressful guessing game. If you remember just two simple rules, you can read almost any chart. When the blue line crosses above the yellow line, momentum is shifting upward and it is your cue to buy. When the blue line crosses below the yellow line, momentum is sliding downward and it is your cue to sell. By using this straightforward tool, we can transition from making emotional guesses to making smart, calculated financial decisions. That's all from me. Thank you very much for your attention.
My name is Nur Atira Najwa and I will be presenting the stochastic indicator analysis for Richtet Digital Berhad based on the daily chart. The stochastic indicator is a momentum indicator that helps investors identify overbought and oversold conditions in the market. It consists of two lines, namely percentage K line and the percentage D line. The percentage K line is the main line that reacts quickly to price movements, while the percentage D line is moving average of the percentage K line and serves as a signal line. Generally, the stochastic indicators range from 0 to 100. A reading below 20 indicates an oversold condition, which suggests that the stock price may be undervalued and has the potential to move upward. Meanwhile, a reading above 80 indicates an overbought condition, which means that the stock price may be overvalued and could experience a downward correction. Based on the chart of Richtet Digital Berhad, a buy signal was observed in early March. At that time, both the percentage K and percentage D lines were below the 20 level, indicating an oversold conditions. Shortly after, the percentage K line crossed over the percentage D line, signaling that bearish momentum was weakening and that the stock price had the potential to reverse upward. Therefore, investors could consider entering the market and purchasing the stock at that point. As the stock price continued to increase, the stochastic indicator moved upward and touched the overbought region. In mid-April, a sell signal was generated when the percentage K line crossed below the percentage D line near the 80 level. This downward crossover indicates that bullish momentum was weakening and that the stock price might experience a correction. Therefore, investors could consider selling the stock to lock in their profits before a possible decline in price. Currently, the stochastic values are approximately 7.69 for the percentage K line and 10.26 for the percentage D line. These values are below the 20 level, which indicates that the stock is once again in the oversold region. However, the percentage K line is still below the percentage D line, meaning a clear buy signal has not yet been confirmed. Investors should monitor the indicator closely and wait for the percentage K line to cross above the percentage D line before considering a buying opportunity. Therefore, the stochastic is a useful technical indicator for determining market momentum and identifying potential entry and exit points. A buy signal occurs when the percentage K line crosses above the percentage D line in the oversold region below 20, while a sell signal occurs when the percentage K line crosses below the percentage D line in the overbought region above 80.
And the last indicator is rate of change. So, how do we use this indicator to speculate the perfect time to purchase and the perfect time to sell? So, from this indicator, as you can see, from the circle, I written down the buy signal and I also written down the sell signal. So, from this indicator, we can see that there is a black dotted lines in the middle between of the chart. We can see the middle of the chart, there is a dotted black line. That indicates zero price, when the price is at its average. Therefore, we can see the blue line moving below the black dotted line and also above the black dotted lines. When the blue line is moving at below the dotted lines, it indicates that the price is at below zero, which means that the price is below average than usual. And therefore, it is the perfect time to purchase the stock. As soon as the blue line from below the zero line, from below the black dotted lines, intercept and cross the black line, and it will be moving upwards from the black dotted lines. That is the perfect signal to purchase. And once the blue line has rose above the black dotted lines, it is the perfect time to sell in those areas because the price are moving way above average. And as you can see, as the price goes up and the price finally moving down slowly until it finally crossed the black dotted line again. Once it crossed the black dotted lines again, it is a very crucial signal to stop the loss because the price will be heading downwards and it will move below average momentum. And that is why, as you can see, after I circle the sell signal, the blue line automatically goes downward, way below average line. And that is why this signal is very important and it is very crucial to understand the line, the zero line in between the charts. And right now, we can see the current situation. If we want to invest or we want to purchase the stock in the current situation right now, I would highly recommend to hold and wait until the blue line finally intercept the black dotted line. Once the blue line finally intercept with the black dotted lines, it is the perfect time to purchase the stock. Because as we can see, the blue line is moving downward below the black dotted lines, which indicates it is moving below average. But once it cross or intersect the black dotted line, it will finally tell the bullish signal to purchase immediately as the price will finally intersect and move upwards and upward momentum and therefore generates profit. So, as a current trader, my advice is hold for a little while until the blue line finally intercept with the black dotted lines, and once it intercept with the black dotted lines, it is the perfect time to immediately purchase the stocks.
In conclusion, the overall technical analysis shows that RTech has experienced both recovery and correction phases, where the RSI identified a possible buy zone when selling pressure became weaker and a sell zone when upward momentum started to slow down. This is also supported by the support and resistance analysis, where the price rated around the main support area of 70 cents and faces resistance around 21 cents. Other indicators such as MACD and stochastic also show that traders should consider buying only when momentum improves and selling when momentum weakens. Therefore, based on the current condition, the best decision is to hold and monitor the stock first, while waiting for stronger confirmation such as RSI moving upward, MACD improving, stochastic giving a stronger signal, and the price breaking above resistance before making a new buy decision.